Hello, crypto world. Welcome to the Chart Historian. My name is Justin, and on this channel, I delve deep into crypto charts, exploring chart structures, fractals, and patterns. This is going to be an XRP video. I want to show you how I see this chart playing out. Now, in my last XRP video, I talked about how we could potentially be approaching a low. However, I wasn't sure, and I threw out the possibility of potentially going lower than where we were at the time. Well, as it turns out, we have gone lower. So how does this affect the big picture? How does this affect the repetitive macro structure that I am claiming is in play? Well, let's dive into that and let me show you. XRP has different seasons. There's a bull run, followed by a decline, and then followed by a range-bound time. It's these three seasons that repeat over and over again. I pointed this out on almost every single XRP video, and the reason is it's important that you understand this. Bull run, decline, range-bound time. It's my belief that we have completed a bull run, we have completed a decline, and we are currently, believe it or not, in a range-bound time. Even though this looks like a decline, it's my belief that this is a range-bound time, and eventually it will move up and begin to resemble more of a range-bound time if I'm right. Now let's dive into this range-bound time and examine what a range-bound time does, and then compare what is taking place here to what range-bound times do, and then we can see where we're at. So this is a more nuanced look at this chart. This is what we're concerned with, the range-bound time. So I divide a range-bound time into three separate structures. The first structure has two parts. Part A, where price moves up, moves down, and then part B, where it goes flat. Sometimes B arches down. In the second structure, we have three waves: wave A, wave B, and wave C. And then finally, in the third structure, price moves up to a peak, which is part A. It then declines to a low, which is part B. And then it moves back up again. It recovers, does a second correction, and then goes into the bull run. So let's examine what's taking place over here. So we can see that there's three separate structures. The first structure, price moves up, and it moved up quite amazing in this first structure, which would be part A. It moves up and it pulls back, and then in part B, it arches down. In the second structure, there's three waves: wave A, wave B, and wave C. And finally, in the third structure, price moves up to a peak, which is part A, and it has currently been declining. I don't know if this is the low. In fact, I think it could potentially drop lower. But at the moment, this potentially is the low, B. Now, what we can do is we can go back to previous third range-bound structures and compare those structures to today's structure. Now, it's important to understand that every time this structure plays out, it plays out in a unique way. We're actually not comparing the similarity of the structure. What we're looking for is the functions within the structure. In other words, we're looking for a move up to a peak, which is part A, a decline. Sometimes it crashes down to part B, the low, and then a recovery, and then a second correction, and then finally it goes into the bull run. So we're searching for functions. It's my belief we have the first one, A. We potentially have the second one. Now, I've thought that the second one was over here or over here. I actually don't know where this second one will be. But looking at past structures, we can get clues. So let's dive into history and see what compares to what's taking place on today's chart. So if we were to go all the way back to 2015, we can see that there's this range-bound time that starts in 2015 and goes all the way to 2017. So the first structure, price moves up and it moves back down. This is part A, and then in part B, it actually arches down. In the second structure, there's three waves: wave A, wave B, and wave C. And then finally, in the third structure, price moves up to a peak, which is part A. It then declines down to a low, which is part B. It then recovers, does a second correction, and goes into the bull run. It's this structure that we're actually interested in. In fact, I've actually talked about this structure in some of my recent XRP videos. I talked about the fact that this structure has a wick down, and I've actually compared this structure starting after the low. So it was this portion right here. And the reason why I only compared this part was because I thought there was a good chance we had completed the low. However, we know that it has continued to make lower lows since then. So what I'm going to do now is I'm going to take this entire move down to the low, the recovery, the second correction, and then the move up into the bull run, and we'll compare it to today's chart, and we'll see how they are similar or different. So here's how this fractal looks. Now, it's possible this could be playing out at a slightly different scale. It could be playing out on a larger scale like this, or even potentially like this. If it continues to move lower, that would mean that this would not be the low, and it could potentially be somewhere further over here. And by the way, I made a previous XRP video where I threw out the possibility that this bull run structure could potentially begin in February. Well, if this plays out something similar to this, that would not be the case. It would potentially be somewhere further down the line. By the way, it was the same fractal that I was basing that February possibility off of. The way it would be playing out right now, I don't think that would be the case. I think we would potentially have any bull run further down the line, but who knows? What these fractals suggest are not set in stone. It's just possibilities. Again, we're looking for functions, and we're looking back to history for guidance, but this is not set in stone by any means. There's also another fractal that we have looked at in the past. Let me show you. So that was this third range-bound structure, which is the last third range-bound structure that has played out on the chart. And this was the range-bound structure that we started off with in the beginning of this video. So I've actually been showing this one as well in previous XRP videos. However, it was since the recovery and second correction. And the reason why I only showed that was because I thought we had potentially already hit the low, but since then we have found out that that was not the low. So in this case, I'm going to take from this peak right here and copy all of this down to the low, and then the recovery, and then the second correction, and then where it goes into the bull run. So let's copy that and compare it to today's chart. So here is that fractal. Now, again, I'm making assumptions that this is the low right here. It very well could not be the low. And if that's the case, maybe it's playing out on a larger time frame or scale, something like this. We'll have to see. Time will tell. But as you can see, there are similarities to today's chart. So if something like this would be at play, whether this is the low or it's further down the line, we would come to a low, and then at some point we would recover. And as I've pointed out in previous videos, that could potentially be somewhere around the high of this fractal. We would go into a second correction, and then once that completes, we'd go into the bull run. So we're zoomed out, we're looking at the big picture. This is the repetitive seasons, if you will, that the XRP chart has: the bull run, the decline, and the range-bound time. So in this video, I've been making the case that we are in a range-bound time. After the range-bound time comes a bull run. That's what I have represented here. And by the way, I don't know how high this bull run will go. It's just a box representing a bull run structure that comes after a range-bound time. Now, it's possible that we are in a decline, as some analysts are suggesting. If that is the case, and it is playing out at something similar to this scale or this scale, that would mean we would first need to complete the decline, and then we would go into the range-bound time. Now, at this scale, the range-bound time is going to most likely take years. Let me repeat that again. At this scale, if this is the decline, the range-bound time, which we haven't begun yet, would most likely take years. Now, what the XRP chart shows us is that these structures or these seasons can play out at different scales. So here we have a very large scale that this plays out at. Same here. However, if we go over here, it's a very small scale. It's my belief that we are repeating a smaller scale or smaller version of this repetitive sequence. Now, what the XRP chart does not give us examples of is a mix and match. In other words, a large decline and a small range-bound time. So if you believe that we are in a decline, you need to buckle up for the long ride or road that will come after this decline. So we've been talking about two different possibilities for XRP. One is a short-term time frame where we could potentially see a bull run in the near future, and the other one is a much larger time frame where XRP is still in its decline and potentially will need to go through the range-bound time. Since we're talking about two different possibilities, I want to step back and examine the bigger picture. So XRP is part of the crypto market. The crypto market, in turn, follows the stock market. So this is the Dow Jones, and it's representative of the greater stock market. What I want to do is I want to bring your attention to this structure right here and compare it to what has taken place after this structure. So you can see how this is a wave right here. This structure starts with a wave. After this structure, we see the same thing, a wave, but on a much larger scale. There is this kind of in-between phase that we also see over here, and then there is the part of this structure where it moves up and crashes. Well, we have a move up. Now we have this wave right here, and actually if you examine this little part right here, we have that same thing, that same structure over here as well. You might be more accustomed to seeing this same structure like this. So from December 2018 to March 2020, this fractal is this structure just matched to the timing, height, and depth that comes after this box. As you can see, we are near the decline, or potentially near the decline, and we are currently working on the peak structure. Okay, so I'm going to compare Bitcoin and gold to the Dow Jones in the hopes of trying to make sense of what's going on and what could potentially be at play. So, of course, the top chart is the Dow Jones, the middle chart is Bitcoin, and the bottom chart is gold. We're going to start from after the C19 crash, basically the structure that has been repeating on the Dow Jones. So as the Dow Jones makes this first wave on Bitcoin, Bitcoin goes into its bull run, its 2021 bull run, and then the ensuing bear market that comes after the bull run. Gold, meanwhile, is just kind of doing nothing and nothing spectacular. After this wave on the Dow Jones, there's that intermediate wave, and we could see that Bitcoin has something similar. Actually, even gold has something similar. Once the Dow Jones gets above this high, somewhere around right over here, that's when Bitcoin really comes to life. So we can see that Bitcoin starts shooting up and moving up quite aggressively. But the problem is, so does gold. Gold starts moving up. As the Dow Jones does this wave right here, Bitcoin does a series of two waves, and it ends right where the Dow Jones does its wave. However, gold is not so extreme. It just kind of moves up, but instead of pulling back, it does something different. It goes sideways. It has this shelf. So once the Dow Jones gets above this high, roughly right around here, what does Bitcoin do? Well, Bitcoin, instead of moving up like it did over here, it actually starts to peak. We can see that it's roughly right around here. Well, that's when Bitcoin begins to tumble. And what does gold do? Gold just rockets up. But there's some nuances that I think are worth looking at here. So there is this point between gold and Bitcoin where Bitcoin peaks right here. And during that time, gold is moving up. And then as Bitcoin declines, well, gold actually pulls back a little. We have this one point in time where they're both kind of moving up to a peak, and then they kind of both pull back before gold does its own thing and just like starts rocketing up. Let's zoom in. So we potentially are repeating something similar. Gold has moved up to a peak, and Bitcoin has not fallen, at least not when this peak was being printed, but then Bitcoin declines, and so does gold decline. So they both are pulling back. Could this potentially be a turning point, just like this was for gold versus Bitcoin? Could that same idea be playing out once again? In other words, gold is now peaking. And if you've watched my stuff on gold, it's my belief gold is in its peak structure, so it would make sense that this could potentially be at play. Just another version of this, but the reverse. And so now Bitcoin would begin to move up. Or to put it another way, the money in gold may rotate out into Bitcoin. Okay, so what does this mean for Bitcoin? We have the Dow Jones at its peak structure, and if it follows that C19 fractal, it will begin a pretty much massive decline. I have a hard time seeing Bitcoin bucking that trend and start moving up. So there are people that believe that Bitcoin is coming to its potential bottom of its bear market. However, I'd like to challenge that idea. Bitcoin may not be near the bottom of its bear market if the Dow Jones is in its all-time high and getting near its crashing structure, which will be a big crash, most likely, or potentially. So could this not be the bottom or near the bottom, but instead just be turning down earlier, and then what people might think is the bottom and it starts moving up is actually just a retrace? Let's focus on that idea. So this is Bitcoin, and if we were to take this highlighted decline, which is the previous bear market, and copy and paste it onto this chart, this is what it would look like. Let's zoom in. Okay, so here we are zoomed in. What I like about this fractal at this scale is I can account for the substructures. If you're into fractal analysis, it's really important to try to account for substructures. What you're actually doing is you're legitimizing your claim that this fractal is relevant to the chart that you're showing. Here's what I mean. So here is the peak, and we have, of course, a peak right here. We have this wave on the chart, and I believe this part of the fractal accounts for that wave. We have a move up and then a series of bounces. We have two bounces on the fractal. Next, on the chart, we have this long decline. We have that same thing on the fractal. And then this part, I can actually account for every part of this structure. So there's this wave on the chart, which is this on the fractal. There's this wave on the chart, which is this on the fractal. There's this wave on the chart, which is this on the fractal. There's this on the chart, which is this on the fractal. This moves up and then does a big drop. The timing is a little different, but on the chart, it moves up and does a big drop. In fact, this move up has two parts to it, two peaks, if you will, and then the decline, and there's a shelf in the drop as well. We have the same thing, two peaks, a drop, a shelf, a drop. Now, what's going on here could potentially just be something like this, and it will continue to drop again, or we could potentially be deviating. That always is a possibility. These declining structures on Bitcoin play out unique every single time, so we should expect some deviation somewhere. It could also follow this and just not drop as much. But what comes after this? Well, this would be the retrace. Now, this would be, if people are thinking that it is the bottom of the bear market, this is the beginning of the recovery. And you know what? To be fair, it could be that case. It could be the bottom of the bear market, and this would be the recovery and would continue to go up. It just seems to not jive with what the Dow Jones is doing. So after this retrace, it would continue the decline, and this would most likely be during that large decline on the Dow Jones. I have a crypto thesis. Let me show it to you. So this is my thesis. This is Bitcoin, by the way, and this blue fractal is the Dow Jones. It's the C19 fractal that we were just examining. I believe I have it aligned correctly. I could be off a little bit. So it's my belief that Bitcoin is potentially following something similar to this previous peak structure. That is the last bull run that Bitcoin had. It's my thesis that in this retrace, altcoins could potentially have a bull run. I think it's a possibility because the Dow Jones is working on its peak. This is a euphoric moment. It would make sense that the altcoins partake in that euphoric moment. Now, this fractal, which by the way is this right here, looks awfully similar to this. And maybe that is what is at play. Maybe this is that. but I'm going to show you why I don't think that it is necessarily that. So let's remove this gray box. Okay, so let's examine the structure. So there is a first wave outside this box, and then inside the box there's one wave, and then it moves up to the final peak, and then there's a sharp drop. So over here we have that first wave, which is outside the box. It didn't go as high, but it's still a wave. Inside the box we have one wave and then a second wave, which brings it to the peak, just like over here. Now, this one had that sharp drop. Well, so does this one. It has a sharp drop. After this sharp drop, and by the way, this sharp drop comes sort of near the low of this wave. Where does this sharp drop go to? Sort of near the low of this wave. After this sharp drop, there is another bounce. After this sharp drop, there is another bounce. Where does this bounce go to? It goes to sort of near the low of this wave that is outside this box. Where does this low go to? Well, it goes to sort of near the low of this wave outside this box. Well, if this is going to continue to play out, we would potentially be going into a retrace. That would be this retrace, which would be this fractal. Now, this fractal does look a lot like this structure right here, but it is possible that we could potentially be going into something like this structure once again over here. And it would make sense that these two structures could be similar. And the reason why is charts like to repeat themes from their recent past. This would also align with a retrace and potentially an altcoin bull run during the euphoric peak that is taking place in the stock market before the real decline begins in the stock market, which would be the next wave down on the Bitcoin chart. Now, I don't know how intense this next wave down would be. We'll have to find out. But that is my thesis. Now, maybe I'm wrong. Maybe this is this, and maybe this is the bottom, and we're going to go into the recovery, but then we have this whole dilemma to acknowledge. There's another possibility. Let me show you. So now we're back to the Dow Jones on the top and Bitcoin at the bottom, and this is back in 2017, the 2017 Bitcoin bull run. If we examine this structure, Bitcoin comes to its bull run peak before the Dow Jones goes into its peak structure right here. By the time Bitcoin declined, the Dow Jones was actually, let's zoom in. So here we are zoomed in. So by the time Bitcoin had declined, at least a good chunk of it, the Dow Jones was just at its peak. Now, to be fair, it goes sideways and then it drops. So the bear market we were just looking at suggests a drop right away, whereas this one goes sideways for a very long time and then drops. So either way, we get that drop, but it does match how Bitcoin has declined and the Dow Jones is still in its peak structure like we see today. And to be fair, this structure is very different from what the Dow Jones would potentially be going into on today's chart. Okay, so one last chart, and then we'll circle back to XRP. So this is the 10-year yield. It's on top, and on the bottom is Bitcoin. I'm on a month candle, so I'm very zoomed out. I believe the 10-year yield has a repetitive structure. In my last video I did, or one of my last videos, I talked about this structure. You can watch it here. Now, I find this interesting. If you notice the last two bull runs, so the 2021 bull run and today's bull run, are quite different from previous Bitcoin bull runs. And it's the same with crypto. It's crypto in general, I think. You look at total, the bull runs look very different versus 2017. It could just be correlation, not causation, but there's a very interesting thing to observe here. So when the 10-year yield enters into the current box that we're in, and by the way, this box is synced up with the Dow Jones. It's repeating a structure that it did during the move up to the 1929 peak and then during the crash. So as this starts to move up the 10-year yield, and by the way, the 10-year yield affects a lot of stuff. We can see right away that Bitcoin starts behaving differently. The previous bull runs were more kind of these needle point peak structures, whereas once we hit 2021 and the 10-year yield is moving up, it behaves very differently. It's these long, kind of drawn out, tricky bull runs to navigate, and the whole thing is continuing to follow the basic premise that the 10-year yield is doing. Well, we know what this 10-year yield chart is following. It's following the structure from 1928 to 1932. At some point, this is going to drop, and this is one more piece of evidence that I believe supports my thesis that what we might experience in Bitcoin is only a retrace, because once this drop begins, I would assume that this would probably follow it in the same way that it's continued to follow the basic move up, even though there have been pullbacks along the way. This one could be potentially an interesting pullback to go through. So I would say as long as the 10-year yield is elevated like this, it's going to continue to influence Bitcoin and crypto. Maybe once we're in this part of the structure, it may go back to the declining part. I don't know. This is speculation, and we will get more of these type of bull runs. Again, this is pure speculation, but it's just interesting how as soon as the 10-year yield entered into this structure, that's when crypto begins to change. And you can make an argument that people are using crypto as a hedge against U.S. debt. The reason why the 10-year yield is up is because bonds have been difficult to sell, so the yield goes up when there's little interest in bonds. Clearly, it seems that people are using Bitcoin as a means of diversification away from bonds. That's just my thoughts, my speculation. It'd be interesting to hear what you guys think. So here we are back at the XRP chart. I apologize for the long video. So the million-dollar question is, are we in the decline? If so, we need to complete the decline, and then we need to go into the range-bound time. If we go into a range-bound time, this will most likely coincide, if the Dow Jones follows that structure, during the decline in the Dow Jones. That could also affect how this range-bound time and decline end up playing out. Now, if, on the other hand, we are following a structure that I think is playing out, I could be wrong, where we are in the range-bound time. In fact, we are nearing the end of the range-bound time, and we're getting ready to go into the bull run. This would likely coincide with that retrace on Bitcoin, and it would also coincide with the peak structure potentially on the Dow Jones. And the Dow Jones is really just a fill-in or a stand-in for all the indexes. So that is the question. Where do you stand? I'd like to hear what you think, and tell me why you believe what you believe. I'm so glad you caught this video. I hope this video was helpful. If you enjoyed this video and you're not yet a subscriber, I recommend hitting that subscribe button. This is very important. This is not financial advice. I'm not a financial advisor. I could have this wrong. I could have some things right and some things wrong. You need to do your own research and stand on your own convictions. For those of you who are interested, I have a Discord. I'm active there. To get to my Discord, you need to join my Patreon. It's a $5 a month subscription. I'll put a link to my Patreon in the description of this video. I'm so glad you caught this video. I hope you catch my next one. Have a great day, and bye for now.